Welcome to Policy in Wonderland. I'm your host, Eviatar Amira, and as you already know, you can call me Evie. In Policy in Wonderland, just like Alice, we are going to explore and see the wonderful world of insurance, insurtech, and everything that's connected to this amazing ecosystem. In Policy in Wonderland, you will meet startups from all over the world, key figures, brokers, and more. So without further ado, we travel today to the country with the largest population in the world, India. And I want to invite my guest to join me as we go down the rabbit hole. Please welcome Ankit Kamra from Covrzy. Namaste, Ankit.
Namaste, Evie. How are you?
Hi, great. So great to have you here and to talk to you from Mumbai right now.
Right now, I'm based in Bangalore,
Hmm.
uh, but been through different parts in my journey with different organizations.
So nice. Oh, let's start from the beginning. Could you tell us a bit about yourself and your background?
I am basically coming with almost a decade plus experience in fintech payments and lending. I started my journey. I mean, prior to that, I am a computers application graduate with a master's in business administration. Started my career as a management trainee with one of the largest banks in India, HDFC Banks.
Hmm.
Uh, was with them for about 1.5 years, and then moved to a bunch of large enterprise level companies, Times of India, then one of the largest NBFC in India, Incred, followed my longest stint at Paytm, where I was an early member, seeing the scale from few hundred employees to about 10,000 plus at a point in time. Seen the entire fintech revolution in India through eyes of Paytm, the launching of UPI, how fintech unfolded in India, from few transactions to billions of transactions happening digitally across different vendors. So I've seen all of that journey. After that, I thought it's like some time to launch something of my own. So I co-founded this company called Flash Cash, which was into payday loans. At that time, that was something very early in those days back in 2018.
In India, right?
Fast forward, yes.
In India, okay.
Um, so I raised a VC money for that venture. Unfortunately, had to shut down that venture due to some regulatory reasons. Then I again co-founded another company called Carbon Card as a founder operator in a founder operator sort of capacity, which was more like Brex for India. They issue corporate credit cards to startups in India. Um, Post that, I joined Plum as a founding member. Uh, they were revolutionizing health insurance in India.
Mhm.
Think of them as Oscar for India. They're backed by Tiger and Sequoia. In total, raised about $15 million. While I was working at Plum, I felt really close to the mission that they were working on and thought of solving for the other side of the plane, not the health side, but the liability side of the plane. So in India, SME contributes to about 37-38% of India's
Wait a
GDP put
second. Wait
together.
a second. Before SMEs and the market, and I jump forward. What inspired you to start Covrzy? And
Um,
how does your
yeah.
personal journey align with the mission of the company? Because as you already mentioned, it's about SMEs, it's about liability markets, PNC, non-life.
So uh, two things that transpired over, I think, last 4 or 5 years. One, as I mentioned, my first startup where I co-founded Flash Cash, the startup that I had to shut down was due to regulatory reasons, right? Compliance that as a first-time founder, I was not aware that I had to take it very seriously. And due to that, there were some repercussions, and I literally had to spend like 2 nights in jail, right? It was that serious and that bad. Those repercussions came out of my own pocket, not just mental trauma, but financial liabilities as
Wow.
well. I had to actually pay, tunes of about like 60, 70,000 or dollars to settle the entire case and come out of it without any fault, just because, I was one of the directors of that business in India. Originally, that company was based out of China. So I bought a Chinese brand into India, rebranded it, repackaged the product, and launched a new app and secured deadlines because I was decently connected in the ecosystem. So this was personal pain Because I know a lot of first-time founders will eventually end up signing in bunch of places, which they are not aware, right? The liability, the first party and third party liability that might come around, out of those signatures, that they might not even have think about it or thought about that in the near or medium term future. So that particular thing transpired that, okay, this is what I've personally faced. And this money could have come out of from the insurance company rather than coming from my own pocket. And there are products for it. So a lot of people are not aware that such products exist in the market. That was one of the core reasons. And the second reason, of course, all my 2, 3 stints that I had, I've always worked as a operator, right? As a co-founder or an operator. I was never in the driver's seat. So wanted to, be in the driver's seat and see how things go. Always been a co-pilot on the other side. So that was the second biggest reason why I started Covrzy. One, of course, pain point and other things, and second, my own personal motivation to try things out.
But why insurance and why this specific problem with Covrzy?
Right. Um, so I think if I take you probably like 5, 7 years back, I've seen how the entire fintech journey unfolded in India, right? Right from no digital payments to billions of transactions happening in a span of 5 to 7 years. So that those entire tailwinds of how regulator changed, how the country's growth actually from pre-pandemic to post-pandemic, how those behavioral patterns changed in the consumer mindset,
Mhm.
really changed how people think about payments, right? I could sense, at least in last 1 or 2 years, the same thing is happening for insurance in India, right? You see macro tailwinds and you see micro tailwinds. Macro tailwinds, government is really betting heavily on the insurance sector. They have opened FDI now, FDI to large extent. A lot of external stakeholders can invest into insurance sectors. That's one of the main reasons. Then government's its own mandate to launch. I'm sure in US you have heard about Obamacare. So in India, there is this thing called Modi Care, which kind of provides health insurance to all. It started with a small segment or sector of the society, but right now they're trying to cover all the citizens, at least all senior citizens in the market right now. So there are these different tailwinds that are probably taking the path what West led probably 100 years back, right, when they were super early in their journey in the insurance sector. So those tailwinds are repeating on that front. And of course, we are a growing sector, growing economy. A bunch of things are bound to happen also from a compliance perspective. Now, on the other side, you see a lot of startups, a lot of startups selling software abroad, a lot of startups selling e-commerce products from India. So India is trying to become the next manufacturing hub after China. Now, all of these things will require the Indian companies from their foreign counterparts to follow a lot of compliance. Now, one of the best part about compliance is these liability policies, because they are very worried about their own market. They are, setting up an entity in a regulated country versus India is still very much highly unregulated. But they want the entities that they are working with should be regulated. So, thought, in my research, there were these pockets or sectors that picked up traction from a liability perspective. And yeah, those were largely main reasons why I started in liability space. First, one, there was this problem of awareness and discovery, which I wanted to solve for. Second, these macro and micro tailwinds. And third, largely on the business front.
And what is Covry's actually missions? What they are
So
going
our
to solve?
mission is to,
Because, sorry to
yeah,
interrupt, but the Indian
yeah,
market is huge, right? And of course, the insurance, you already started to talk about it, but the SMEs market that you are focusing on is, you know what? You will tell the details.
yeah.
I will not take your
So
role, so go ahead.
that's fine. Okay. So the idea and the purpose why we started is, to ensure that every founder should focus on the growth of the business rather than worrying about these small things, right? That is the core crux of the mission of the company, wherein rather than worrying about these small first party, third party liabilities, the founders should focus all their energies to build the business, to grow the business, rather than worrying about these nitty-gritties that might happen during the journey. That's the core mission. Now, SMEs in India is a very large sector, as you rightly pointed out. Right? There are more than 6 million SMEs in India, and if you talk about unregistered, then further more. We are talking about a country where,
60
just about
million, 60 million, 60 million SMEs.
6 million,
Okay.
6 million SMEs. Just about like 500,000 just are working with 500,000 sellers are just alone registered with Amazon, right? Then the power, which are selling goods digitally through different means. Then if I include other channels like Flipkart, Shopify sellers, the number could be well above 1 to 1.5 million. And this is where, people are aware that, we are selling goods online, we are selling goods to different channels. A lot of these have manufacturing risk. A lot of them have other risks arising from fire, theft, and other perils that can be taken care of, right? Almost every day, I think once or twice in a week, you hear in the market a fire that has destroyed probably a business that was there for generations, right?
Wow.
Generational businesses, right? Uh, and those generational businesses are not able to pick stuff off the ground if they don't have that external support. Unless they have made like tons of wealth, which practically is very difficult right now in a competitive market like India. It's very difficult for any business, who has suffered that loss. And personally, I've seen one or two incidents in my own friends and family circle, wherein they were doing good in their life. One fire or one flood destroyed all of it. And considering climate changes, bunch of other things that are happening, these things are becoming more and more frequent. And these are standard product. Okay, we are not innovating on anything. We are just saying that, okay, boss, this is available. This just cost you like few $100. So why not just buy it and just close it?
And how they respond to that? Because we know that historically, like many MSMEs, micro SMEs, etc., perceived insurance as an unnecessary expense and refined from purchasing it, right? And I read that almost around 85% of MSMEs in India remain under insurance. Sorry, not under insurance, uninsured. So, yeah, how does Covrzy plan to take this issue? Because you are right now in a way try to educate the market.
See, the biggest factor that we have uncovered in our research was trust, right? We spoke to probably hundreds of MSMEs and SMEs in India. Your mom and pop stores, your businesses that are operating out of small parts in India, with about 10 to 50 employee size or 50 to 100 employee size, right? Employing about 50 to 100 odd employees. The biggest factor in their you can say experience was that within their circle, if someone else has purchased insurance, they never had any good experience. Claims was rejected, right? They need that one party, one neutral, you can say, reference in between whom they can trust. So the biggest challenge that we need to solve for is trust in India right now, right? The market that, because the challenge over here is one, the number of insurers are very less. In total, there are about 60 odd insurers in India, versus for a country like India, you need about 400 or 500, right? You have a population, one of the largest population in the entire world, right, for India. And even in fact, from liability perspective, you don't need, even like brokers like us only exist in about few thousands, right? 3,000 to 4,000. Now imagine, can 3,000 brokers or 4,000 brokers for that matter serve a large market like India? No, practically impossible. One broker can at best handle 1,000 clients, 1,500 clients. And I'm talking about large brokers who are employing like large, like Prudent and Marsh of the world, right? They're employing about 1,000 to 1,500 workforce. Wherein even if you give one like 5 to 10 accounts to each person, then also it doesn't translate to the actual math that is required. So of course, this number on the supply side needs to grow. Product innovation needs to grow. And third, the trust part can be solved by pushing a lot of right content into the market. Vernacularize that particular content in small bits and pieces that your end users can understand. And one other thing which we figured out that acquiring these SMEs via feet on street or offline approach will not work because the CAC will be unsustainable, right? You are selling a product where the premium is about, let's say, 100 to $150. Overall commission would be about $15. But the CAC to acquire that particular SME offline will be in the range of about $150 to $200. So no matter, even if you take LTV of like 5 to 7 years, you will not be able to break even on that particular customer
Right.
unless you sell in more products and all of that. So taking all of these into account, you have to acquire these customers digitally. How we are solving for the trust factor is we are partnering with people who have already established trust. Think of an example where a B2B platform who is already engaging probably like few 100,000 SMEs on their accounting or a SaaS sort of platform, helping their SMEs on accounting front. Think of
So so
lawyers who have
so
a customer base
Covrzy,
of five.
Covrzy acting like a embedded insurance product in their process.
In their journey, yes.
Embedded, yeah.
Yeah, not really embedded. What we are doing is we are just bundling or co-packaging their product with
Mm,
insurance. So what they sell it as, right? Think one of our partners that we have tied up with is a law firm, right? So think of someone helping an SME file their tax returns. Their pitch is that, sir, right now if you take our services, you will pay us, let's say, $20, but if you pay us $30, you will also get X amount worth of of insurance, right? So of
mm,
course then they educate, and then we are kind of becoming that enabler for their sales team to perform better. We give them placards, we give them battle cards to
okay.
sell and solve those queries. It's not really right now an embedded experience because we are super early. We are also seeing how the market unfolds, but the early signs indicates that the biggest or the easiest way to solve for trust is reaching out via someone whom they have already trusted upon. Simple. Because if I go independently as Covrzy, they'll be like, who covers you? What covers you? Right? They're not aware. But if I go along with someone, I can take their name, build some trust markers around that. That just solves to some level in some extent. And of course, with time, you have to spend general marketing, general awareness expense to these SMEs, right? Build your brand over a period of time. That's how you'll be able to solve for the problem that you're trying to solve.
So this is the main go to market strategy to with
Yes, for
collaboration.
SMEs.
Nice.
Yes,
Yeah, according to the market size and as you mentioned, the CAC, the higher CAC that you have in the SMEs
yes,
is
yes.
the much wiser one.
Yeah.
And what is your business model? Your insurance business model is a broker? Is a just a broker? Is it an MGA? It's
So in India, the value chain doesn't have an MGA.
okay.
Interesting part is that. So you have, I mean, the value chain from top down starts as reinsurer, then you have
Mm-hmm.
insurer, then you have reinsurer, broker, insurer, then insurer broker, then POSPs, which is your agents on the grounds, which can be tied
Okay.
with some brokers, right? And then the end customer. So the value chain flows like that in India. As I said, regulatory and compliance requires overall in India for us to be able to serve different sort of needs. Uh, what we are seeing is a white paper sort of draft that MGAs might be approved in India, but you never know with the regulator, right? Draft is just here and say. If and when it approves, it's a different story.
Mm.
But technically, India requires so I'm not sure if you're aware about the Indian banking ecosystem. Indian banking ecosystem is also split. You have multiple banks. Then you have NBFCs, which is non-banking financial institutions, which can lend, right? You have like medium bodies. In India, in insurance in India, you have like insurance companies, which requires, let's say from a capital perspective, net owned funds like $10 million, close to that. And a broker requires like $100,000. So you see the gap. Um, there is no middle party or middle person or an entity in the middle that can play on the advantage of both a broker and an insurance company. So of course there will be someone in middle who will act like an NBFC of the insurance sector, who will have some sort of underwriting prowess to create unique products for a targeted user segment and base. Um, right now, to answer your question, we are acting as a digital broker
Mhm.
and working with multiple carriers, front-end carriers, to sell their product. What we are also doing is from our awareness initiatives, we are trying to co-package different products in bundles that are easily consumable by the end customers. Think of bundling a fire insurance with a signboard insurance, right? For your SME, a fire sort of event might happen or might not even happen throughout his lifetime. But a signboard insurance is one such event which he knows that, okay, in next 2 to 3 or 5 years, which will happen, right? Your signboard getting damaged due to thunderstorm, fire, any other external events which is not related to depreciation will happen or will bound to happen,
Mhm.
right? So similarly, when you bundle these, sorry my language, but these non-sexy products with something like the use cases that they have heard about, they tend to relate. And once they tend to relate, then it's easier for us to co-package and sell these to customers.
And so, just to clarify, is Covrzy is dealing with fire and like property and casualty, fire, third party liability, yeah. And
Yeah.
what about workers' compensation, as we know that we have in the US, or employer liability? You also deal with that, or this is also differently kind of different insurance, as we know from the US?
So there are two personas that we are right now targeting. One persona is the SMEs that I just spoke about. The second persona is startups. For
Ah, okay.
startups, we sell bunch of products. It's very similar to directors and officers insurance, professional indemnity, your workman compensation, cyber. Um, why startups and SMEs together? Startup is a low-hanging fruit for us. I know a bunch of founders between founders community who have a strong network. So it's one of the ways for us to increase our, you can say, gross written premium processed via us or via the platform. Because in the SME segment, the ticket sizes are fairly low, right? For unless we hit masses, like okay, we are in like 200,000 SMEs, 300,000 SMEs. For us to make some revenue, it's very difficult, right? Imagine selling $100 premium product and overall commissions at a gross level is about 15 to 20%. Net of all expenses, you might end up in about 5 odd percent, which as a business isn't that, right? You'll just make like $4 or $5. It's on the first year, it doesn't make sense. So from a maths and unit economics perspective, we are targeting both startups and SMEs. Startup is a sweet spot because like any other market, startups are the most ignored segment in
Let's
any
have a
product
talk.
and category.
Let's have a talk about the Indian regulator, because you also already sent me that materials, and I read about it, and is kind of proactive in all the fintech sector, right? Especially maybe in the
Yes.
insurtech, because it creates like a sandbox, and they expand it from 6 months to activate it with insurance company to 36 months. And
Yeah.
it's very good, as we know, for especially for insurance companies, for insure
Yeah.
techs. What can
So
you say about the regulation in India in general?
I think the regulator, what so again, drawing parallels with the fintech industry, RBI was initially very close and conservative
Mhm.
initially in their approach, but they knew that they have to change in order to serve the masses. And that's what we see, right? Creation of new entities like NPCI, which is the driving force behind UPI in India. So, in a very similar way, insurance regulator in India is IRDAI. And they are also very much aware that they need to open up this conservatism approach in order to be able to serve masses. And this is where, we one of the initiatives that you just spoke about, like providing sandbox to early stage companies to experiment with different products, expediting product approvals, making sure and plus running consumer awareness campaigns on masses and general front to make sure that consumers are not cheated. So IRDAI is becoming active, but what I see is right now we are in a phase where we need these regulations to probably flow in much faster than taking like even 12 months for that matter.
Mhm.
So even at the pace of, let's say, current regulations and development, it will still take years, right? Which like a lot of us may not have, right? So I think if we were to compete with the likes of like developed markets, the speed of these spaces and regulations and sandboxes and other initiatives that the regulator is taking has to happen at a faster pace. But of course, they have their own point of view that we have to keep consumers' interest in mind and all of that. So what I see is special bodies like InsurTech Association in India, or these specialized bodies that are there for fintech, for InsurTech, for
Mhm.
other sectors need to come up together, and there has to be a hand-in-hand collaboration between regulator and these industries, so that as an industry you can propose some changes. The regulator sees those changes, that as a body you have come in together and you accept or deny those changes, or put some sort of draft into proposal or working. That's how RBI and the Digital Lending Association of India or FinTech Association of India works in tandem. And that's why we saw all of these changes happen very quickly. So right now, what we need is a very speedy collaboration between different industry bodies on transparent and innovative product from insurance companies, and allowing more and more players to come into the market. That will just level the playing field, both on supply side and demand side, of course.
So, as you mentioned, to get more and more players in the market, could you please share us some insights about the Indian culture that will be beneficial for those seeking to engage or collaborate with Indian companies?
Um, with regards to folks seeking collaboration, I think talking specifically about my sector in insurance side, I think
Yeah.
need uh, we need, I think, too much, not intervention really, but too much support on product innovation. So people who are innovating on insurance products, who
Mhm.
have tried out and tested out similar sort of product with a similar persona and sets in different markets, and they are sure that the same sort of persona sets in India. I think that would be a superb collaboration indeed, wherein they know the how the persona behaves. They've already tested out actuarial models to prove that this product is working in different markets,
But
and
if I
now
test
they are
it,
ready.
sorry, but if I test it, for example, in the US, now
Yeah.
I want to go and expand to India. This is just copy paste. No, it's not like
No, of
okay,
course
it's a
not.
different market. I can
Yes.
set aside the language, but what about, for example, how I buy insurance is something very in
Mm.
in the culture of the country. The way you buy insurance, the way you purchase, the way you act, the why, the why is different here.
Yeah.
And
So
what is
from
the
a
why
culture
in India?
perspective, sorry. Yeah. Yeah.
Yeah, go
Um,
ahead. Go ahead.
yeah. From a culture perspective, I think we Indians are very price savvy, right? Let me put it that way. There is one thing that's called value for money. We go beyond value for money. What is beyond value for money? So I think I was having this very interesting conversation with an SME owner one day that I was trying to convince him why he should buy insurance, fire insurance, why it is important. And there was this one very interesting statement that came out of his mouth was, it is as good as donating this money to any temple in a donation box, because I'm not sure whether I will get any return out of it or not. It is just donation from that perspective, that whether
Wow.
the God will give me some like fulfill some of my wishes or not, I don't know. but it is as blind as putting that money into a donation box. Eventually, at the end, I convinced him. But as I said, value for money and the cultural inhibits that comes from how we are raised as a person is very different in India. So slowly and steadily, things are changing. Why they are changing? Because a lot of India that you see is right now, India probably might have the largest number of youths in India that, I mean, the youthful workforce in India, right? Which is taking charge of things, right? A lot of, I would say, age-old businesses are now being run by new aged sons of the fathers that used to run the business, right? So that particular, you can say generation, call it Gen Z, Gen Y, I'm not sure,
The
but
average
those are
age
more,
in India is 28, approximately 28,
yeah,
29. It's very
yeah,
young. Yeah.
yeah. So they are more tech savvy, they are more aware, they are more context aware that okay, if a outlier event in my business happens, it will be end of my business. And the possibility of these outlier event has increased over a period of time. And
Mhm.
that's what news feeds them right throughout the day, that fire happened, flood happened, blah, blah, blah. And they have witnessed it, one of these incidents in their entire life. And so they know it'll happen. It's just about when it'll struck them is they're not aware. But for sure, they are more educated, they are more informed, they are more structured in their decision making. So a lot of these changes on one side on the culture aspect. Second is we are also seeing compliance side changes happening from the government as an initiative. For example, right now there are states in India, like in US, you have different states.
Mhm.
In India, you have about 29 odd states, and multiple states are now pushing shop insurance as a mandatory product the moment you set up any new business. Let's say as a shop, you need to have different licenses. If you have a shop and establishment license, along with that license, you need to mandatorily purchase a fire insurance of sorts, right? Some states are tabling this bill in the parliament. Once tabled, once being like motor right now, insurance is mandatory. Some of these insurance will automatically become mandatory. Then you will have different sort of wedge as a broker. Am I digitally enabled? Am I able to speak the language that my customer speaks? Am I interacting on WhatsApp? Am I interacting on Slack? Am I interacting on web? So all those things, by the time as a platform, as a broker, if you have ready from layers perspective, you definitely have edge in the market, right? I feel all of these changes are happening as we foresee, and things are changing, of course, on the right side.
So as we're closing right near to the end of the show, to last,
Yeah.
what is the one key takeaway you want to people to have about Cover Z? Cover Z and not Cover Easy, by the way. You explained it before. It's Cover Z.
I think one key takeaway would be to the listeners of this podcast would be that insurance is not as complex as you take or think of
Nice.
it. It's a simple thing. If you grill it down to a very basic layman language, it's a contract. Eventually, every contract has to be bound by the law. As long as you have understood the contract and you have understood the terms, you will never ever feel betrayed. And this is where we come in, or where our specialty comes in, to break down these terms and conditions to so simple, so you can say in so simple English or any other language for that matter, so that the front person understands what they are buying into. They don't feel betrayed, they don't feel cheated at the end of the day, and something happens to them. Whatever they are buying is with full awareness and full context.
And they understand, of course. They
Yeah,
understand what they buy.
yeah.
Is there anything else you would like to add before we wrap up?
No, I think that's about it.
Nice. Okay. So, Ankit, thank you very much. It was a pleasure, and it was great to learn more about India and, of course, Covrzy. Thank you very much.
Thank you, Avi, for hosting me, and once again, really privileged to be on your show.
Thank you. Have a good one.
Super.